ladies and gentlemen, and welcome to another video. And guys, in today's video I'll be teaching you a very simple strategy with an extremely high win rate. I've personally tested this strategy out myself. You guys will see why it has an extremely high win rate. But again, before we get into it, make sure that you watch this video all the way till the end, because not only will you learn the strategy in this video, but I'll tell you guys the next steps to help you to take the strategy and go and trade it in demo or in live or in a funded challenge, however you want to trade it. Okay guys, but guys, before we get into it, please hit the subscribe button down below and like this video for more awesome content. It does help the algorithm and push it out there. But for now guys, let's get straight into it. So as you guys can see, I've brought up the chart of E-mini S&P 500. Now again guys, you can use any market to trade this in. You can trade it in Forex, you can trade it in crypto, you can trade it in any other market, but make sure that you go and backtest these concepts and the plan I'll show you so you can prove it to yourself that it works. Okay, so guys, you can see this is the plan, this is the strategy on the right side. So this plan does not require a daily bias. We don't need to look at the daily, and again I'll show you why. But this does require analysis of 3 time frames, which is the hourly, the M15 and the M5. Okay, so make sure that you've got that in your trading view and you're able to switch between it at the very top. Okay, now this strategy requires the understanding of a premium and discount tool. So I'm going to explain to you exactly what that is very quickly. Guys, you want to find your Fibonacci tool, okay, in either the left bar, which is either up here. So take out your Fib tool and draw it. Again, my premium discount tool is already done, so I'll show you how to do it. So again, to draw it out, make sure you double click on it and have the settings set as I've done it here. So again, 0, 0.5 and 1. Again, you can color it how you want, but ultimately the premium and discount tool is very, very simple. Okay, we're using this across swings and I'll show you how we use it. Now, when we're talking about the premium price in this tool that I've outlined, we're talking about the price that is at the 50% or above. So anywhere in this region here, anywhere in this region is the premium, okay? And anywhere in the region below at the 50% level here and below is the discount, okay? So that's what we're going to use. We're going to use this tool to help frame our trades. Okay, so again, it's done by the Fib tool. Make sure you have the settings done, and there you have it. This is the premium and discount tool. So make sure you guys understand what I just said. Don't worry about knowing exactly what, because I want to explain to you exactly how to use this. But again, like I said, premium is at the top, discount is in the bottom. Okay, now ideally this is where it becomes important when we are in a bullish market. So I'll actually get rid of these drawings. When we are in a bullish market like this and we have a swing that's come up, we ideally want to be buying, going long when price has come down into the discount over here. That's what we want to do in a bullish market. We know this is a bullish market because the arrows are going up. Again, like I said, we've got discount here, we've got premium here. We want to be buying in a discounted market in a bullish market. Okay, now oppositely, vice versa, in a bearish market when price is coming down like this, we want to be selling when price is up in this premium area, just like that. Okay, so guys, like I said, we've got the premium at the top, we've got a discount here, and again, we know that the market is fractal and it moves in swings, but again, we want to be selling at the premium, okay, above the 50% in this area here. And I'm going to show you exactly what I mean by this. Okay, so guys, I hope that you understood that. If you didn't, go back and watch that bit again. And again, we will require understanding of this tool. Now, like I said, price moves in swings. Okay, so I'm sure you guys can see this. This is just a universal truth. We can see that price moves in this kind of swing-like manner. We can see it over here, for example. We can see it moving up like this. Okay, so now what we can see is on the hourly time frame, again, we're going to be going from the highest time frame down. So 1 hour, M15, M5, just those 3 time frames. Now on the hourly, just as I showed you guys, we've got a swing that is here. You guys can see we've come from low to high over here. Okay, now if I drew my premium and discount tool, just as I showed you guys here, I want to draw it from the low all the way to the high, which is at this candle here. You guys can see currently price over here is at and within the premium. So we don't want to look to go long in the premium. We want to look to go long when price is below this 50% level, and then we can look to go long. So we can expect price to come back down somewhere in this region here, and then we can look for longs to go up like that. Okay, but again, like I said, we can see on this hourly time frame, where is price? We said price is still within the premium. So what do we expect? We can expect price to come back down into the discount. Okay, we can expect that. That's a likelihood. So again, we can look for potential shorts. Again, this is what we're saying. Because price is not in the discounted area, we can look for shorts because we expect price to come down into the discounted area before we look to go long. Okay, so again, on this time frame, we can understand at this very moment in time, we can look for shorts because we expect price to come lower. Okay, so guys, we understand that on the hourly. So what we're going to do is we're going to go into the M15 time frame, because now we understood that on the hourly we're looking for shorts based on the premium and discount tool and based on the swing I just showed you on the hourly. So if we go to the M15, you guys can see, I'm going to bring the trade plan across here. Now what we're looking for is, I will actually get rid of this, is we're looking for a well-priced fair value gap. And guys, for those of you that don't know what a fair value gap or FVG is, I want to explain that again, which is it's the gap between candle 1 and candle 3. So imagine if you got 3 candles in succession. Let's say, for example, over here, we've got candle 1 over here, this candle here, candle 2, and candle 3, okay? You guys can see that between the high of the candle 1 and the low of candle 3, there is a gap, and that is what we call the FVG. And you can see that, again, it's not always going to be everywhere. I want to highlight it there. That is the fair value gap, okay? And again, guys, you can see in this example over here, we've got candle 1, candle 2, candle 3. So if we look at the highs and lows of candle 1 and candle 3, again, it's always the gap between candle 1 and candle 3. If there is a gap, you guys can see we've got the low of candle 1 over here and the high of candle 3 over here, and we can see that there is a gap. So again, we can draw our fair value gap here, okay? Now again, we can draw up another example where there isn't a fair value gap, which is here. You guys can see we've got candle 1, this candle here, candle 2, and candle 3 here. You can see that there's no gap because the high of this candle here, over here, and the low of candle 3 over here, they overlap. So there's no gap between candle 1, candle 2, candle 3. So I hope you guys got that concept again. That's the fair value gap. So you guys can see we've come down. We're looking for a well-priced fair value gap. Now, what do I mean by that? I mean, if we get our premium and discount tool out, but first we have to look at the swing. So guys, we can see we've come down, come up, we've come down, and now we expect price to come up before we come down again, okay? And we expect price, like I said earlier, to come up into the premium. You guys can clearly see here, like I said, I'll draw the swing out to make it clear. Come down, come up, come down. What did I say earlier? If we are in a bearish market, we want to be selling in the premium, which is up here, and you guys can clearly see price is in the premium of this swing. So we expect price to come up in this region before coming down, and that is what we mean by well priced. A well priced means that it's either in the premium of a bearish swing or it's in the discount of a bullish swing, and that is what we mean by a well-priced fair value gap, okay? So that means well-priced. The fair value gap is essentially the gap, like I said earlier, between candle 1 and candle 3. So guys, you can see, number one, we are well-priced in a bearish market. You guys can see we're coming down, and we are within the fair value gap. You guys can see we had this gap created here. I've drawn it with the gray rectangular box, and you can see prices come up into the fair value gap, okay? So that is tick number one. On our trade plan, we can tick that off. We are in a fair value gap and it is well priced, okay? And again, like I said, in either the H1 or the M15 swing, we're currently on the M15 time frame. So again, that ticks off number one. Now, number two is a market structure shift on the M5. So guys, you guys can see, if we hit into the M5, you guys can see that, again, we've got another fair value gap over here, again, on the M5. But ultimately, we're looking for a market structure shift. And what do I mean by that? That means that we've got hints that we're moving from a bullish market into a bearish market. So say, for example, here we've got come up, come down, come up, come down, come up, come down, come up. So if price breaks this low, then we are now looking to change direction, okay? And again, attack this swing low, okay? So I hope you guys understood that. But again, like I said, if I'm gonna draw this out, where is the market structure shift line? So we expect market structure to shift if price breaks this line, okay? So I'm gonna draw that out in nice red. So as you guys can see, I wanna draw that again so it's nice and clear. We've come up, down, prices come up here, come down, come up here, come down, which is where I've drawn that red line. Prices come up again. If we break this line, we now can expect price to continue back down and break this low, okay? Because again, we've had a market structure shift. So guys, I want to bring the trade plan back down here. So let's see what happens on this M5. Don't forget guys, so far to make it clear, we're in a well-priced fair value gap on the M15. If we go back, you guys can see on the M15, we're in the bearish swing, we've come up. And now again, we're looking for the market structure shift. So again, if this line breaks, we know that we've got a shift in market structure. So guys, you guys can see that again, there's been a little bit of a gap, but you guys can clearly see that we have broken this line. And in fact, what I will do is, before I continue, I'm actually just going to bar replay that back up so that it's a little bit nice and clear. And there you go, we've got the bar that's reappeared. So now you guys can see price has broken that low. Okay, so now we have the market structure shift on the M5 time frame. So now we can look to the next step, which is entry and fair value gap. And guys, I'm going to correct this. I know this is point number 5. Okay, on the exit. So again, we'll talk about that in just a second. But now we've got the market structure shift on the M5. We're going to look to enter at a fair value gap on the M5. So again, we are on the M5 time frame. We're going to look for the fair value gap on these swings. So you guys can see we have come down, come up, come down, come up, and now we've broken this. And now we must find a fair value gap. So can we guys see we've got candle 1, candle 2, candle 3. Is there a gap between candle 1 and candle 3? Yes, there is. It's over here. And guys, I'm going to draw that out so we can see the low of candle 1 is there. The high of candle 3 is there. So I'm going to draw this gap here. Okay, and guys, to make that a little bit more clear, I'm going to stretch this out. You guys can see the low of candle 1 is here. The high of candle 3 is here. And you guys can see there's a gap which I've drawn out in this rectangle here. So now this is where we look to enter. Okay, so we enter at the fair value gap. So again, we can look to enter anywhere within this fair value gap, ideally on the low, the bottom portion of it, because we're looking to short. And again, if we're looking to go long, we look at to enter on the top part of it. But because we're looking to go short, look for the entry at the bottom of that fair value gap. And now rule number 4, again, we've ticked rule number 3. Statement number 4 says stop loss covering the high and low. So again, we want to cover the high. Okay, you guys can see that this is the high of the swing. Okay, like I said, low, high, low. Again, this is the swing high. We don't expect this to be broken, so we can put our stop loss there. We can expect price to come back up before coming down. Okay, so that's where we put our stop loss. So now we've got our stop loss there covering the high in this scenario, and we're going to take profit at the next level. Remember, now we're going to reference the 1 hour or M15 swing. In this trade example I'm showing you, we were looking at the M15 swing, okay? And you guys can see we draw the premium and discount tool there. So we expect the price, because we're already well priced, we expect price to go where? Down and break this low at the very least. So we're going to look to take profit down here, okay? We're looking for an approximate 3.35. In fact, let's increase that a bit. It's around here. A risk reward of 3.41. Okay, so guys, let's go back to the time frame. We've got our stop loss in place. We've got our take profit in place. Now everything is ticked. Everything is ticked. Okay, so we're going to see what happens next if price comes back, tags us in, and sees if we can go and take profits. Guys, let's look what happens. Now we can see price has come and tagged us in. Again, we're still in the trade, and now price is moving heavily downwards. And as you can see, price is coming down very nicely, and there we have now broken the low. So again, there you have it, guys. We've now taken profit for 3.34R. Okay, so guys, I hope that makes sense. Like I said, in this strategy, we're only using 3 time frames, which is the hourly, the M15, M5, and there's no daily bias. And guys, if you really restrict this trade plan, like I said, exactly the same trade plan to these time frames, you have a very high strike rate, a very high win rate. The reason being is because we're not looking at any time frames that are lower than M5 that can cause potential losses. You're keeping it very strict to every single time frame in each statement. So say, for example, statement number 1, well priced fair value gap, H1, an M15 swing, we're only looking for a fair value gap that is well priced in these swings, and then you can tick it off and go on to the next one. So guys, there you have it. Like I said, on the hourly, we expected price to come back down, because again, you can see how large the swing was. Price came from this low to this high. We expected price to at least come down here before looking to go up. Again, that's because of the premium and discount tool. So again, we understood that. We want to look for price on the hourly to at least come down here. Then we waited for the market structure shift on the M5. As you guys saw here, I'm actually going to move this trade plan out of the way. And we saw that over here, where we broke this line. So you guys can see, we broke this orange line. And then we looked to enter at the fair value gap over here, which was the gap between candle 1 and candle 3. And we looked to go short, okay guys? So guys, like I said, this is the exact trade plan that has a very high strike rate. It's simple, it doesn't require any daily bias. And if you follow it to the T, again, you will be profitable. But now what I'd suggest you guys do is take the concepts that I've explained to you in this video and go and backtest it with a pair, with either a Forex pair or an index pair or a crypto, whatever you want to do. See and prove to yourself that these concepts work. And if you didn't understand anything in this video, go back, replay it and see if you can understand it again. But like I said, this is the exact trade plan. Follow this trade plan to the T, and that is a simple strategy that will help you to increase your strike rate and again, achieve profitability. So there you have it guys. I hope you enjoyed this video. Don't forget to like the video down below, subscribe to the channel. And guys, if you want to check out my website, feel free to check it down in the description below. But again, a very simple strategy as it is to go and learn and make sure that you can become very profitable very simply. Take care guys, and peace.